Managing tens of billions, Steve Schwarzman's Blackstone is on the rise to become the biggest private equity firm in America. But his empire will not be complete until he acquires Equity Office Properties, the largest real estate trust in America, worth over $30 billion in 2007. It's a collection of over 500 premium offices in every major city across America. One man, Zell, has built this real estate empire through calculated risk-taking, the size of which none has ever seen. It's an embodiment of one of the greatest real estate booms in America. But as a market boom based on lies and speculation, underneath the prosperity, a financial storm is looming. And Zell knows it. While the rest of the market still lives in euphoria, it's the perfect opportunity for Zell to exit with substantial potential profit.
Not that I expected a sale to happen. I thought Equity Office was too big to be acquired.
Equity Office stock is trading at around $40 a share, but Steve Schwarzman believes it is undervalued. He offers Zell $42 a share. It was looking like the biggest real estate deal in history. Blackstone's $42 bid sent a signal to the street that Equity Office was undervalued. Now everyone wanted a piece. Expecting more bidders to come in, Zell rejects Blackstone's initial offer. Blackstone comes back with a shrunk price of $47.5 a share. The offer has become too good to ignore. If it goes through, Zell will make a fortune for shareholders and for himself. But as an astute investor, he questions why Steve Schwarzman will be buying real estate assets during the peak of the bubble. Steve Schwarzman is a very risk-averse person. He was not going to buy the real estate assets from Zell without having a guaranteed plan of generating profits. His end game was that he was going to sell different buildings to different buyers. The profit from some of the parts was going to be bigger than the entire market value of the REIT. Zell realizes that Steve Schwarzman will unload at least half of the properties for immediate profits. It will be a shrewd business move, but it will also dismantle the legacy Zell has worked his entire life for. He now must find a different buyer that could exceed Blackstone's offer. Vornado Realty is one of the biggest players in real estate. It offers a shocking bid of $52 a share and a promise to keep the real estates intact rather than breaking them up as Blackstone plans to do. But Zell and Vornado may have underestimated Steve Schwarzman's resolve. They are in for a war. Schwarzman raises the offer to $52.25 a share, 24% higher than the market price when the bidding war started. Steve Schwarzman has that competitiveness that sometimes comes from utter conviction that he and his company are just simply better than everyone. Zell now has a tough decision to make. Whoever takes over their company will become the biggest real estate conglomerate in the world. Through consolidating broken real estate, buying out failing properties and companies, and returning them to profitability, Zell has made himself the undisputed king of real estate. It is the year of 1939. Nazi Germany and the Soviet Union just signed a non-aggression agreement. Poland is squeezed in the middle and will soon be divided and devoured. It's alarming news for the Jewish residents in Poland. Sam's father, Bernard Zell, books his family the last train out of Poland before the Nazis bomb the railroad tracks.
My father looked at that treaty and said, this is basically an agreement to split up Poland. And so my father got off, he was on a train, turned around, went home, got my mother and said, we have to leave.
Zell's mother is pregnant with Sam while still on the run.
And they arrived in the United States May 18th, 1941. This was kind of the background, and I was born September 28th. So literally I was born 100 days after they came to this country.
By the time they arrive in the US, they're nearly broke. But Bernard Zell is more determined than ever to do whatever it takes to support his family in his new land they now call home. When Sam Zell turns 12, his father achieved the American dream and has built a successful jewelry business. He moves his family to the upper middle class neighborhood in Highland Park, Illinois. Sam Zell has an unusual childhood. Even from an early age, he demonstrates a distinctive entrepreneurial talent. His first business is selling the Playboy magazines.
This is the kind of magazine that in those days wasn't sold in the suburbs. It was limited to those under the tracks magazine stores. So I showed it to a friend of mine, and he was enthralled and said, geez, can I buy it? And I said, sure. And he said, how much? And I said, I don't know, $3. He said, great. So he paid me $3 for something that I had paid 50 cents for. And P.S., I'd gotten to read first. And maybe for the first time in my life, I really understood supply and demand. There was an unlimited demand for that product. And so I started, quote unquote, importing Playboy from my friends.
But in spite of his business acumen, Sam is mediocre at school. His siblings are the top students in college, consistently getting higher grades than their brother. And Sam is struggling to measure up. Sam Zell is not your typical Ivy League educated investor. He's a street-smart hustler who is very grounded in the real world. But at the time, his parents, especially his father, were a little concerned that Sam didn't meet their expectations in terms of school. To prove to his father that he can succeed elsewhere, Sam Zell becomes fixated on finding a business idea and taking a shot. At the time, a real estate developer is building a 15-unit student apartment. Sam Zell immediately realizes that this could be an opportunity for him to make money.
We didn't know how to manage or rent apartments. We had no clue what it entailed. It just never occurred to me that I couldn't do it. So we created a simple brochure and went to pitch the owners.
His audacity pays off. In spite of his lack of experience, the landlord decides to hire him to manage the new apartment. Zell knows something that other real estate managers don't. He knows the customers. As a student, he understands the kind of housing the students like the most. Zell and his classmate redesigned the entire interior, removing outdated furniture and making the apartment more vibrant. He had an insight that other professional apartment managers didn't have. He knew that the young people did not want an environment like home. They wanted something more fun and exciting. So at the time, the Scandinavian style was very popular among the younger generation. So Sam and his classmates just remodeled the interior and bought furniture with clean and modern designs. And it's a huge success. His apartment becomes highly sought after by the students. After finishing 2 more apartment buildings, the same landlord gives them all to Sam Zell to manage. By the time he graduates from college, he has already made a consistent income from managing apartments. But he knows this kind of money will never make him rich. He needs to start buying his own properties.
And so I went to law school not because I wanted to practice law. I went to law school so I had a degree, and that if I didn't work out at whatever it is I was doing, I would be able to, in effect, still practice law and make a living.
Sam Zell also feels an obligation to his parents to get through law school. He enrolls in Michigan law, although he finds the subject boring and uninteresting. But deep down he knows, to truly make his own decisions, he needs to become financially independent. To do that, he will own income-generating properties. He has made enough from his job as a property manager. It is time to start looking for an apartment building to buy. He bought a 3-unit apartment building for $19,500 with savings and loans from the bank. He remodeled the interior in a way that appealed to students. That allowed him to double the rent. A few months later, the rents he collected become enough for a down payment for another apartment building. By the second year of law school, Zell owns more than 3 apartment buildings and also has a management contract for Eastern Michigan University.
I graduated from law school in 1966. I was 24. I had $250,000 in the bank, and I had made about $150,000 that year. That was an income of about $1.1 million in 2016. I had established a solid foundation for my family.
But even with that kind of money, Zell still decides to become a lawyer and treats his real estate business as a side hustle. His parents escaped Nazis, so they had this very risk-averse attitude that got passed on to Zell. He thought he could do both. Having a stable job as a lawyer was an insurance policy just in case his real estate business failed. It's a perfect plan, except it won't work in the real world, as Zell is about to painfully find out. After earning his law degree, Zell starts applying for a job in every law firm in Chicago. He believes that his impressive resume of real estate deals will easily help him land a position at the best law firm in Chicago.
I included in the resume, all the business I started and all the things I had done, and along with my GPA and everything else. And I then had 44 interviews. I had 43 rejections. I was in the top quarter of my class. It just didn't make any sense. And finally I was interviewing with the head of one of the law firms, and the guy looks at me and he says, "Tell me about your deals." And I said, "Tell you about my deals? I want a job." He says, "Oh, we would never hire you. You'd be here, 3 months and you'd be leaving and going into the real estate business. So we would never hire you, neither would anybody else." And he was right.
Although he eventually finds a job through his family connections, the circumstances force him to rethink his career choice. As a creative, big-picture thinker, he realizes he's never built to be a lawyer, a job that requires him to be detail-driven and meticulous. He quits in just 4 days and decides to do real estate full-time. But Zell isn't about to risk his own fortune alone. He learns that to succeed in the business, he needs to scale. That also means leveraging other people's money. By now, he had quite a bit of success by owning properties in college towns. So he started researching. He found out that universities in smaller cities across America were growing like crazy. So that was going to be his focus. In 1966, he raises enough capital from 20 wealthy investors, including his father. Until now, the property he owns are small-time apartments. But with a large sum of money, he's ready to go big. Zell's first building is a massive 99-unit apartment building next to the University of Toledo. It's a $1 million investment, and he has calculated that the worst-case outcome is an 8% return, but the upside is a potential 19%.
But all I looked at was the fact that I was able to buy one of the few apartment buildings in town, so I didn't have any competition.
He believes that there's an undersupply of quality apartments for students. After redesigning the interior based on his acute understanding of what young people want, he raises the rent. The asset immediately starts generating cash flows, and it makes a 20% return within a year.
So that deal was one of the most successful deals that I had ever done, simply because there was no competition. And therefore, where there's no competition, you can produce exceptional margins.
Impressed by Zell's ability to profit, The same investors double down and write him bigger checks for bigger apartments. By 1971, Zell has become a rising star in the local real estate scene. At the age of 30, he has already become a millionaire. But to Zell, it's just the beginning. Opportunities are boundless. He put up $10 million to buy the Broadway Plaza in Los Angeles.
Half of the investment business is about raising money. So every time Zell had a successful investment, he used that as a marketing tool to raise more money. To him, scale is everything. Scale was how he would become the biggest player in finance.
But unbeknownst to Zell, his investment success has an unintended consequence. He now has a target on his back. The 1970s is a decade of drastic economic change. In spite of the political turmoil and the failing Vietnam War, America is still the most prosperous economy on earth. A revolution is underway in one of the biggest sectors in America. It's the invention of the real estate investment trust. Capital from all over the world is flooding into REITs, creating an unprecedented boom. Zell joined the industry after quitting his job as a lawyer. Riding the real estate boom, he has built a portfolio of residential and commercial properties worth hundreds of millions. He may be on top of the world, but he has no idea that the IRS is gunning for him. Zell's brother-in-law, Roger Basks, has been his tax attorney on many real estate deals.
Roger, a Harvard-trained lawyer with an impeccable reputation, was my go-to person on real estate deals with tax implications.
In the mid-1970s, Zell was working on acquiring a high-rise hotel from Reno, Nevada, with very complicated taxes. He was trained as a lawyer, but he didn't want to get bogged down by the details. So he hired his brother-in-law to take care of the taxes for him.
But a few years later, Roger's law firm becomes a target of an investigation by the IRS. Both Sam and Rogers are indicted on the charges of tax fraud. Zell's real estate empire is now more vulnerable than ever. If convicted, he'll lose everything he has spent his last 15 years building. Ultimately, Zell is dismissed without being charged, but his brother-in-law, Basks, is not so fortunate. Getting indicted by the IRS will forever leave a mark on Zell's record, but he vows to overcome it. He will build a business so large and so powerful that no one dares to hurt him again. To grow his real estate business, Zell needs to raise more money for bigger projects. But his brush with the IRS has made potential investors skeptical. And to make matters worse, by the mid-1970s, the real estate market has become overly saturated, making it difficult to find profitable investments. Zell then does the unthinkable. He stops buying any properties, cold turkey, as he realizes the real estate market may have been oversupplied and overbuilt.
Everyone thought I was nuts. After all, occupancies were still over 90%. Absorption was high. Companies were hiring. It was one of many times I would hear people tell me that I just didn't understand. I didn't listen. I just stepped aside while the music was still playing.
Zell has always been an audacious risk taker. He's also a very practical investor who knows real estate from hands-on experience. But what really sets him apart is the ability to have conviction on his own views, sometimes against the rest of the world.
By the time the real estate market crashes, Zell immediately goes on a buying spree, acquiring distressed properties on the verge of default, with just $1 down payments on majority of them. Between 1974 and 1977, Zell purchases roughly $4 billion in assets. His bold action and his clever financial scheme pay off, and investors become eager to join him again. By the mid-80s, Zell has built a real estate investment powerhouse, making hundreds of millions of dollars a year. Investing in distressed real estate properties has been a stroke of genius. But Zell wonders, if he can turn around bad properties, can he also turn around bad companies? And there's only one way to find out. He is about to join the corporate takeover business. The decade of 1980s belongs to the corporate raiders. As the Fed cuts interest rates and lowers corporate taxes, companies are flooded with easy money. The age of excess is here. Led by Carl Icahn, many Wall Street titans have amassed unparalleled fortune by taking over corporations. They raise the stock price by temporarily firing the management, cutting costs, and with fancy promises. After 2 decades of opportunistic deal-making, Zell has become a prominent real estate investor. He owns a portfolio of residential and commercial properties that generate him hundreds of millions a year. But Zell has a bigger ambition. If he can turn bad property assets into profitable ones, he believes he can also turn around bad companies in distress.
If we've been as successful in real estate as we have been, are we really just good businessmen? And if we're good businessmen, then why wouldn't the same principles that apply to real estate apply to buying anything else?
Sam has the skill and the capital. All he needs now is just an opportunity. By 1983, the predator finds its prey. To become a great investor is to become a lifelong student.
That all my life I've basically focused on reading and digesting information, because the well-educated, up-to-date you are, the better you are to be able to assess judgment and assess risk.
Finance is a field that rewards mostly on the quality of your decision-making, rather than based on the hours of work you put in.
Decision-making is a science and also a skill that can be taught and learned. Brilliant.org is a great place to learn probability, game theory, and systems thinking, which are all the basis for becoming a great decision maker. What makes Brilliant stand out from the conventional lectures is its emphasis on interactivity. It makes the learning process fun and more effective.
Sometimes, even with a simple understanding of probability and logic, you can easily distinguish between nonsense from real facts.
To get started for free, visit brilliant.org/Phineas. The first 200 people will get a 20% off Brilliant's annual premium subscription. After testing his thesis on smaller companies, Zell then sets his vision on one big conglomerate, ITEL. Founded in 1969, ITEL is a leasing company that owns aircrafts, rail cars, and shipping containers. But after its early success, the company's management starts draining the company's resources by throwing lavish parties and paying hefty bonuses to themselves. The company filed for bankruptcy in 1981. It emerged from Chapter 11 in 1983, with its future still clouded with uncertainty.
After working in real estate for so long, Zell developed a strong preference for physical assets. And ITEL was a company with a lot of tangible assets.
After buying 5% of the company, Zell asked the board for a seat at the table. But as a newcomer on the scene, no one takes Zell seriously. The board promptly dismisses the offer. Zell isn't the one to back down from a fight. He immediately buys up to 22% of the company, and it starts a hostile bid. After a year of back and forth with the board and a proxy fight, he successfully takes over the company and becomes the chairman and CEO. As an outsider, Zell is not welcomed by the board and the shareholders. The only way to prove himself is by delivering tangible results. His first job as CEO is to cut costs by selling underperformed divisions and reducing redundancies.
He had a simple plan: find the most profitable business the company owns and double down on that.
After cutting costs and liquidating underperformed assets, Zell has accumulated $50 million of capital, the amount needed to invest in the main business, one that has a competitive edge. For ITEL, it's the railcar business.
In a single year, 1979, the industry had built over 100,000 rail cars. The railcar industry had succumbed to easy money for building. That bubble burst in 1981. During that same period, 65% of the existing rail cars in the country were scrapped. On the demand side, loadings were flat but stable. Supply was going down. At some point, those two lines were going to intersect, and when they did, anybody with rail cars was going to make a lot of money.
Anticipating a price hike, Zell concludes this is the perfect opportunity to buy as many rail cars as possible at a steep discount. It proves to be a slick business move. Since the company acquires rail cars at a discount, it beats the competition at a wide margin, and the company's revenue immediately skyrockets.
What do most big companies do when they have a lot of cash? They acquire other companies. It's a great way to diversify the business, but Sam had a different agenda.
Zell has made a killing by cornering the railcar leasing market, successfully turning ITEL around. It is, however, not a growth market. Zell is never content with past successes. He needs to elevate ITEL to a higher level.
To me, it's always what's next, and I think that's what drives most very successful people. It's never about the money. I mean, that's a way of keeping score. It's about achievement, and it's about winning a game, and it's about upping the ante.
Turning around a bad company versus growing a company often takes a completely different leadership styles.
But Sam knows, as long as he sticks to the fundamentals and logic, he will find a way. He acquires a wiring and cable distribution company in 1987 called Annixter Brothers. With the consistent cash flow generated from ITEL's railcar rental business, Zell will invest them back to expand Annixter around the world. It's a risky move that goes against what Zell has learned about only investing in bargains. But if the business succeeds, it has the potential to become a unicorn enterprise that will continuously print money for the years to come. And it's a huge success. Annixter experiences an explosive growth, and it becomes ITEL's fastest growing division by 1992, generating close to $1 billion in revenue a year. The success of Annixter convinces Zell to unload the railcar business in order to free up more capital to acquire better assets. By selling 70,000 railcars to General Motors, he reaps $2.3 billion. But with all that success, Zell once again does the unthinkable. By 1992, he steps down from the CEO position at ITEL.
I think the biggest strength that makes Zell a great player in finance is his understanding of the public market. He is exceedingly good at finding investment opportunities and, more importantly, raising the necessary funds that match them. He's a master at getting equities together in a way that benefits everyone, but also more profitable for him.
In the 1990s, Zell seized an opportunity to make real estate investment trusts go public.
There was no visibility into markets or assets, and there were no metrics. Brokers held all the cards, and they weren't telling. The simple genius of public REITs is that they turn bricks and mortar into transparent and predictable liquid assets.
As the biggest real estate investor in the country, Zell becomes a board member of NA REIT in an effort to make a complete publicly traded real estate asset. He raises additional $3 billion in 1997 after acquiring the largest collection of premium office buildings across the country. He packages them all in a REIT. What he doesn't know is whether Wall Street will buy it. By the time Zell's REIT goes public, it's the biggest real estate portfolio in the world, comprising more than 32 million square feet of commercial offices.
What made this REIT a very attractive investment was its predictability of cash flows. The tenants were majority companies with average lease term of 7 years. It allowed Zell to offer a 5.7% dividend.
Equity office properties eventually turns into one of the most sought-after stocks, as US is entering a housing boom. By 2006, equity office properties becomes a target of a bidding war by many wealthy Wall Street firms. It's a huge compliment to Zell's accomplishment. It certifies his position as one of the most powerful forces in finance. But even titans make mistakes, and Zell is about to face the toughest challenge of his career. By 2006, Tribune is a 159-year-old media conglomerate that is a majority owner of Chicago Tribune, the LA Times, and various news networks. Due to the advent of the internet, the news industry is struggling to adjust. After several attempts to sell the company to private equity firms, the board of Tribune turns to an unlikely buyer, the grave dancer, Zell.
We looked at the performance of the Tribune for the 7 years prior to the time we bought it. During that 7 years, average revenue declined 3% a year. When we underwrote the deal, we underwrote it at 6% decline each year going forward. The risk reward of the transaction was extraordinary both ways.
Zell realizes that these media brands hold long-term value. With his magical touch, this value could be unleashed. He proposes a leveraged buyout deal that will take the company private.
Future of this company is currently right out there in front of us. And if we keep operating the way we've been operating in the past, there is no future.
Zell's approach is simple: cutting costs by removing redundancies and use the savings from them to opportunistically invest in growth opportunities.
His approach worked before and may continue to work if only the market conditions stayed the same. The timing he took over Tribune couldn't be worse. It was the beginning of 2008.
One point, Zell dubbed himself the grave dancer for turning a profit on troubled asset. His $8.3 billion buyout of Tribune ended in bankruptcy for the publisher in December.
The 2008 housing crisis has brought the entire newspaper industry to its knees. As businesses are struggling, they cut their advertising budget first. Over the years of corporate battles, Zell has become accustomed to getting what he wants. But this time, he's going against a force more powerful than he has ever encountered. Even after receiving a $650 million rescue loan from JP Morgan, the company still struggles to stay alive. It's a time of great change for the world. Zell suddenly finds himself as a member of an old guard. The Tribune failure is a reminder that the market can make even the smartest of men look like fools.
I did the Tribune company. I lost $300 million. If it had worked, I would have made $5 billion. I liked that risk-reward ratio. Would I do it again? Yes, because the risk-reward ratio was appropriate.
The era of Zell may have come to an end, yet at the age of 80, he refuses to retire.
Retire from what? I mean, I haven't worked since the 4th day that I was in that law firm.
Zell is a no BS go-getter. I think he's probably the most representative of the older generation of investors.
Zell's rise to the top also coincides with the broad prosperity America has enjoyed since the 70s.
Sometimes my team argues with me. They can't believe we're leaving money on the table. But I want to create an environment where everyone wants to keep playing.
As an opportunistic capitalist, Zell indeed plays the game of market better than anyone.